Alright, trying to finish reading the Flood Disaster Protection Act. I just barely got through the types of loans that, the types of transactions that are covered. Property that can be covered include the following: all walled and roofed buildings, even those under construction that are principally above ground and affixed to a permanent site except gas or liquid storage tanks. Mobile homes and travel trailers set on permanent foundation, whether the real property upon which the mobile home sits is taken as collateral, and high-rise condos with common ownership. Exemptions are loans that have original principal balances of $5,000 or less and an original repayment term of 1 year or less. Non-participating communities. The flood regulation applies to loans where the property is in a special flood hazard area, but the community does not participate in the National Flood Insurance Program. That's a non-participating community for you. However, the mandatory flood insurance purchase requirement does not apply in these cases. Lenders may not make a government-guaranteed or insured loan secured by improved property in a special flood hazard area unless the community participates in NFIP. And if it does choose to make a loan in a special flood hazard area where the owner can't qualify for flood insurance under NFIP, the National Flood Insurance Program, then it does so at a risk to possibly its own safety and soundness. And if it can be, if management can find a way to mitigate those risks, then it can be done. It's just certainly not advised. Property classifications for residential buildings include 1 to 4 family dwellings, apartment buildings containing more than 4 units, condominiums and cooperatives in which at least 75% of the square footage is residential, hotels or motels where the normal occupancy of a guest is 6 months or more. These are considered residential buildings, and rooming houses with more than 4 roomers, and residences with incidental non-residential purposes where the total area of incidental usage is less than 25% of the square footage or 50% in the case of a single-family dwelling. Non-residential buildings include buildings used for small businesses, churches, schools, farms, pool houses, clubhouses, recreational structures, mercantile structures, warehouses, industrial buildings, nursing homes, mixed-use buildings with less than 75% residential square footage, and lastly, hotels and motels with normal room rentals for less than 6 months. The requirements under the Flood Protection Act, Flood Hazard Protection Act, general requirements are mandatory flood insurance. Lenders must require flood insurance when making, renewing, increasing, or extending a designated loan. If a property is no longer in an SFHA due to a map change, the lender may drop the requirement. Determination of whether property is in an SHFA and whether flood insurance is available is a general requirement, and the lender is responsible for correctly determining if the structure is in an SFHA, and the NFIP maps must be used for that purpose of determining if the property is located in an SFHA. If the lender uses a third party to perform determinations, the third party must be able to guarantee its work to the bank's satisfaction. The bank may change a reasonable fee for flood insurance determinations. Fee for determination is not a finance charge. However, fees for life of loan coverage are considered finance charge under Reg Z. The banks must use the standard flood hazard determination forms developed by FEMA to document whether or not the improved real property is located in an SFHA and whether the flood insurance is available. Determination is good for 7 years unless map revisions show the property is now in an SFHA. An institution that requires a loan from a mortgage broker to other third party through a table funding transaction will be deemed to have made an extension of credit and will be subject to the flood insurance regulations. A loan purchase or loan participation does not trigger the flood regulatory requirement. However, if an institution pools funds that are simultaneously advanced, the requirements do apply. Table-funded loans are covered and the party advancing the funds is treated as the originator. Draws against a line of credit do not trigger the requirement to make a flood hazard determination. The determination is completed at the time of the loan origination. Notice to the customer. No notice is required if property is in an SFHA, but the standard flood hazard determination form is still going to be required. The notice is required to be sent to borrowers and the loan servicer when making, increasing, renewing, or extending the loan secured by property in an SFHA. Notice may be given by the seller or lessor if written assurance of delivery is given to the bank. Still recording. For property located in SFHA, the notice must include FEMA approved warning that the structure is or will be located on an SFHA, a discrimination of flood insurance purchase requirements, a statement that flood insurance coverage is available if applicable, and a statement of whether federal disaster relief is available in the event of damage to the property. The 2007 updated mandatory purchase of flood insurance guidelines had 2 sample notices, one for property in participating communities and one for property in non-participating communities.
Here now, but she's not even barking.
Somebody's going to shoot them. She's barking because of the gun. Timing of notice.
See them down there? They're all down there now.
All right, let me check. Notice of loan service.
5 deer in your nana's yard. See them down there at the apple tree? There's the other one's right there. He's eating that other weed.
She doesn't know.
Erica, I wouldn't get too much water because she's going to be driving, so you don't have to stop.
She's not drinking anything. Sorry. Lay down, Dora. Notice of loan servicer? Really? Or is the timing of notice? It must be mailed delivered within a reasonable time before the completion of the transaction and to the loan servicer as soon as practicable thereafter. The notice should be sent or delivered no later than the bank sends other notices concerning insurance or taxes. The circumstances should determine when is a reasonable time before loan settlement. Which is generally 10 days, even though they really don't like to say that. Where there are multiple applicants, the lender may decide which applicant will receive the notice. Notice of loan servicer. The bank must notify FEMA or its designee, the insurance agent, in writing of the identity of the servicer of the loan secured by property in a special flood hazard area. The bank must notify FEMA of its designee, the insurance agent, of a change in servicer within 60 days of the effective date of the change. Escrow requirements.